So, everyone, let's get started. I hope everyone is doing well. Today is November 21st. I'm going to record a market update video for you. A lot of people have been asking me if we've entered a bear market or if it's just manipulation. What could be the next moves in the market? Regardless of whether we're facing political manipulation or not, we need to have a carefully considered and detailed plan to execute. In this last month, of course, we've traded less exactly because the market is under this kind of instability. It's very unstable and unpredictable. So it's generally not good to expose yourself too much or take on excessive risks when the market is unstable. In the financial market, we need to have a clear execution plan, right? Because you have to value your money. So there's no point in exposing yourself too much when the market is tough, right? So we need to have that sharpness when trading, okay? So let's get started. Let's start with Ethereum. Here's the thing with Ethereum, right? Ethereum dropped much less than Bitcoin. Let's go, first of all. Let's look at Ethereum versus Bitcoin here, okay? What we see is this. Ethereum has a particularly strong and notable region where it's currently situated, which is an order block, okay? If this particular order block fails to hold, we have our key level right here, in addition to our optimal zone for potential support. So starting from these specific points onward, I believe that Ethereum could potentially pick up significant speed and momentum against Bitcoin. In other words, Ethereum might actually perform better and show stronger recovery in this bounce back from the recent drop than Bitcoin, okay? But now, shifting our focus and looking at the chart of Ethereum versus the dollar itself, let's analyze what the price action is telling us in this context. Here's what we have. Ethereum has picked up speed and is coming to mitigate the hot zone of this weekly bullish range where the base is at 1,387 and the top is at 4,968. So this corrective move by Ethereum would be to mitigate the OTT zone of this range. However, this movement is actually coming with quite a noticeable and significant volume, okay? Even though it's decreasing, the volume is still significant, just like Bitcoin's. But what could happen here, okay? Here's what could happen. Bitcoin could keep accelerating its drop, and Ethereum could come and accumulate in this region and then accelerate upwards. It sweeps up the available liquidity just below this bottom, which is at 0.79 on the Fibonacci. So it's like, look, a one-to-one move. Ideally, it would make sense for Ethereum to keep accumulating right here in the Watt zone and then accelerate upwards. Now, speaking of something more extreme, the market unfortunately is doing just that. It's creating these surprise moves. So yes, it could happen that Ethereum comes down to sweep liquidity below 2100, mitigate this small order block here, and then accelerate upwards. That could also happen. So we have this accumulation zone here. If it fails, we might try this order block because there's liquidity here. So we would look at this low as liquidity. If it fails, guys, then things start to get ugly. Then things start to look bad for the long-term market. I'm saying this for those of us trading intraday, because we'll probably be trading intraday for a long period. heavily manipulated by the high concentration of liquidity they're going to capture here. Now, for those trading with a medium to long-term perspective, it's going to be an excellent opportunity. But personally, even though there's interesting liquidity here, if we pull it up, we see a double bottom, which is very interesting. Let's look at the monthly chart here just to get an idea of where a bottom might be. And here we wouldn't really have an interesting region, you know. Maybe here, this little block on the monthly, Ethereum could do that, but I think it's very unlikely for Ethereum to reach this region. I wouldn't be surprised given the high level of manipulation we've seen this past month, but even so, it's still pretty unlikely. But let's go, in the worst case scenario, we'll fill buy orders in this region here at 1,350 reais. Buy heavily. But ideally, Ethereum would keep accumulating here to make a move upward, especially because it's looking pretty interesting on the chart versus Bitcoin and also on the monthly. We're now inside a monthly order block where the price swept liquidity, broke structure, and the market is coming back to the order block to pull back before accelerating and breaking the high. That would be the natural market cycle, which is a recurring pattern that we often see in financial markets. And the natural market cycle for Ethereum specifically would be this. It's looking much better than the Bitcoin chart at this particular moment in time. Okay, now let's lower the time frame and take a closer look at the details because the chart already has a lot of analysis on it, which means there are already several indicators and annotations present that can help us understand the current situation more thoroughly. On the 4-hour time frame, what are we going to do? We're going to identify where the internal liquidity is. Our internal liquidity is here. You can see that the market formed an angled accumulation here, which leaves a lot of liquidity above it for us. So what would I expect from Ethereum now? Since the market, looking at the 4-hour chart, isn't making liquidity grabs, so we can catch good shorts. I placed several shorts, but they weren't triggered because the market isn't making pullbacks. It's accumulating and dropping, accumulating and dropping. So it's making things quite difficult. However, from now on, the market might start to make some pullbacks. So since we have internal liquidity here, the market could come and sweep this liquidity, mitigate this order block, and start a bearish flow, right? This order block here is actually the key level, okay? Let me explain it to you here. On the 12-hour chart, we can see it better. We have the internal liquidity and a 12-hour order block. If I lower the time frame to 4 hours on the 4-hour chart, I won't see an order block. I'll see the base, I'll see the bottom of a correction. Of a corrective move, then an impulse, a flip in this case. So I consider it my key level, a 12-hour order block. My order block here on the 4-hour chart would be here. This would be my 4-hour order block. You can see that the optimal zone is exactly in the region where we're taking a short. So it's a very interesting region. At the last moment, I thought what would happen is that the price would sweep this liquidity up here, mitigate the daily order block. There's an order block above this region. There's this region, which is a particularly interesting area. And after it made this liquidity sweep, then I imagined the price would accelerate, just like it did. But the price didn't do that, quite the opposite. It just accumulated and accelerated, accumulated and accelerated. Now the price should sweep this liquidity to make the next downward move. But I believe it won't be a move that will accelerate downward if the price comes to sweep this liquidity and mitigate this region. I believe the price will sweep this liquidity and mitigate this region, but it will return to the lower zone here, to this region where it's accumulating now, where it's being traded now. It will align itself and then start an upward movement. That's also a possibility. But now we'll have to wait for the market to move and trade based on the information it gives us without guessing, because the market is making some very complex moves right now. Now let's talk about Bitcoin. Here's the thing with Bitcoin. Bitcoin is a bit more complex than Ethereum because Bitcoin's range isn't as clear as Ethereum's range. Why is that? Because this liquidity that was previously captured here, it was captured at this bottom and used to break through this top. So in this next drop in search of liquidity, there wasn't as much liquidity here anymore. That's why the market accumulated. After it accumulated, it picked up speed. It didn't accelerate after sweeping the liquidity. And what happens? The market now, it's coming to mitigate our position. And for now, if we switch to the weekly chart, we can see that Bitcoin is already trading at the extreme order block, or OB, of the weekly and also of the monthly, right? But on the monthly chart, this bottom area is considered to be a zone of liquidity. That's where the problem with Bitcoin's range lies, because this bottom is considered liquidity, since on the monthly it hasn't really swept any previous bottom liquidity. A bottom is formed by 3 candles. For us to consider a bottom, this is the scenario, this is the setup here. This candle swept the low of this one, and the next one broke the high of the one that swept the previous low. So let's go ahead and explain. It broke the low and the next one broke the high. So here I have a characterized bottom. What exactly happens within this scenario and what unfolds here? But not on the monthly. If we lower the time frame here to the daily, we can see the following points. Bitcoin, interestingly, ignored our key level, specifically our very first key level. Furthermore, it also disregarded the optimal zone. However, it stopped here at a second key level, a key level from the weekly itself, which would be the base of this candle, actually the body of this lower candle here. So here we have another key level, which is where Bitcoin found support. So in a setup that we see that makes sense to us, Bitcoin should do the following. It should accept the liquidity that was swept internally, the liquidity below the key level, and the mitigation of this POI, and accumulate in this region so we can start a correction flow, not an expansion flow, but a correction flow to correct at least up to this FVG here. At least up to this FVG. Otherwise, things could get ugly for Bitcoin. If Bitcoin doesn't accept this swept liquidity, but this mitigation of this POI, which is a very interesting POI, a super interesting region here if we just look at the impulse. We have our POI right here, exactly in this region. So it's an interesting POI. Bitcoin should accept this swept liquidity and accumulate in this region. Otherwise, if Bitcoin doesn't do this, the invalidation of our range is below 74,000. If Bitcoin breaks and sweeps below 74,000 here, that already invalidates this range for us. What does that mean? It means that the next bullish move for Bitcoin probably won't sweep up to the high. It won't surpass the high. So what could happen? Bitcoin could come down to mitigate this order block. It's in the region of 69,000, between 69,000 and 65,000. This could happen too, folks. And I wouldn't be surprised, considering that Bitcoin swept through and broke the hot zone very easily. So I wouldn't be surprised, but I believe that regardless of political issues or not, Bitcoin should accumulate in this region here. Moving on to the 4-hour chart so we can get an intraday view for us as a group of individuals working together. To get an intraday view, it's a setup very similar to Ethereum here, okay? First, folks, we have to look at liquidity. Where is the liquidity? The liquidity is here, right? So Bitcoin has to come and sweep this liquidity. Regardless of the price point it trades at, it has to sweep this liquidity. Once it sweeps this liquidity, we wait for alignment and then take a short. Probably this short won't, if this liquidity sweep happens, probably this short won't break the lows, okay? It will stop here at the block that is formed. Before continuing with the lesson, this would be a technical rationale for a possible pullback here after the sweep. Other than that, we don't see much else on this 4-hour chart. Let's take a look here. Let's look at the 15-minute chart just so we have an idea here. On the 15-minute chart for Bitcoin, Bitcoin created a trading range here. I'll show you how trading on the 15-minute chart would look with our strategy. It would be something like this. Here's the range. Just waiting for it to load here, guys. The internet is a bit slow today. Let's look at the 3-day liquidity, just so we can identify on the 15-minute chart where the highest concentration of liquidity is. So we can see the highest concentration of liquidity is between 88 and 90, right? Let's go. Between 88 and 90. So our liquidity is above the upper part of our range. This already shows us that there's a strong potential for this range to fail. So the market will likely move to this region because the liquidity is above. We have liquidity here at 85 and liquidity at 86,600. It'll work, you'll see. 85, 86, yes, it'll be around this region here. So what could I try here? I could try a short here in this order block with a very tight stop loss because it's very likely to fail. So it would be a short like this with a tight stop loss. Then you might ask me why it's very likely to fail. It's obvious the significant liquidity is above the upper part of the range. So if it's above the upper part of the range, what is the market looking for? The market is seeking liquidity. Got it? So it's going to go after the upper liquidity. Of course, it could happen that the market finds this liquidity at this top interesting, mitigates this area, and then makes a downward move. It can happen, yes. However, if we look at the HTF chart, we're inside a macro area, so it's complicated to trade against it within a macro area, especially when you're also against it in a micro area, right? So ideally, On this chart, it would be best to do nothing. Let's go. Now, just taking a quick look here, the video has already gotten pretty long and we've already talked about Bitcoin and Ethereum. So, it's interesting. Ethereum is being captured in an interesting region where the price should react. If it doesn't, it'll try to reach lower regions here. But I believe that within this optimal zone, it will react and make some moves. Bitcoin is the same thing. I'm also going to make a video talking about altcoins, but I'll focus only on altcoins because this video got too long. That's it, folks. Thank you to everyone who's watched the video up to now. If you can, share it, leave a like, and let's keep moving forward.